Hi, Zach. Welcome to Venture with Grace.
Hey, Grace. Good morning. I'm so happy to be here, and thank you for including me.
So to start off the show, I would love for the audience to get to know you a little bit more. So before you started your own company, you worked in Goldman Sachs and TPG Capital. So what were some like core lessons that you've learned in your finance era that kind of like shape you as a founder and now like, as an investor?
Yeah, so really good question. So even to go back further than that, I've always been entrepreneurial. I'm the oldest in my family. I think that entrepreneurial spirit came with the birth order. And so when I was in college, I started a company. When I was actually working at Goldman as a side project, started a company. And so I was always working and tinkering with different ideas. The first company I launched in college was a pretty cool idea. You could basically design your schedule, your class schedule, based on a predicted GPA. And that sounds a little crazy. There was a lot of controversy around it in college because professors said, "Oh, this is terrible. Students are, choosing a class based on, the grade they can get." And actually, my point was the opposite, which was, I really want to empower students to take a risk and take classes that maybe out of their comfort zone. I was an econ major, and a lot of my fellow econ majors were scared to take a philosophy class or a history class because they were worried they would get a D, relative to all the history majors or philosophy majors. So it was actually a really cool way to, get students to get out of their comfort zone and try new things. So we launched at Yale, and we had basically 85% of the student body using it within a couple of weeks. So it went totally viral. So I've always been really interested about startups, about going from 0 to 1, about building things. And so after college, I graduated in '09. I worked in finance, both as an investor and as an advisor to tech companies for a couple of years. And that was a really good experience because it showed me scale. It showed me really big companies. When I was at TPG, we led the Series C of Uber. And so that was, you could see these companies at a very different scale than I was trying to start them at. So, and then really after those experiences, I started another company, which was a fun experience we can dive into before I started in venture.
Totally. Oh, okay. So I know you sold a company to Snapchat, and then the company before you also raised venture funding and everything. So I wonder, what were the core lessons that you've learned selling a company in general?
Yeah, yeah. So my startup drop was, we raised venture funding to raise money from Spark, Accomplice Ventures, some great angels. I was really grateful for our investors. They really were influential on my development and maturation as a founder. And so that was a wonderful experience. And we worked on it for about 2 years, got up to about 10 employees. And then we had, Snapchat approached us about combining forces. We were building a location messaging app where you could leave messages at physical locations, digital messages at physical locations, and when you get there, whether it's tonight or 2 weeks or even longer, that's when your phone is triggered and you receive the message. So it's kind of like these digital sticky notes you could leave for your friends everywhere in the real world. And we were a bit ahead of our time. We did this in 2013 to 2015. This was when location services on your iPhone weren't great. It would drain your battery. It was just a lot harder. They would always give you those warnings. Do you want to allow this, or do you want allow these apps to run in the background? And so we built some really powerful battery preserving technology that we had some IP around. And so Snapchat approached us, and we had a tiny acquisition with them. But that was a really great experience, and just seeing it end to end as a founder, from starting something, from raising money, from building a team, from launching a product, from iterating, launching a second product, to getting to a tiny acquisition was really rewarding and an incredible learning experience compressed over a couple of years.
Was so Drop is like Firefly's mother company, kind of.
Exactly. Yeah. So we launched
Okay.
2 different apps. Yeah. So one was Drop, which was like the virtual sticky notes. The logo was a parachute, like dropping these messages at different locations. And then we launched a second app called Firefly, which I thought was very cool. I was actually having a dinner a week ago with a bunch of founders and VCs, and we were talking about, like, is social and local going to come back? social local mobile? Like, is there going to be a reincarnation of like the next, popular social app that has location in it? And so Firefly, our second app we launched, was like a Firefly. You could turn on your light, and when your light's on, you can see all of your other friends who have their light on a map, almost like Find My Friends. Like, that's the top half of the screen, and the bottom half of the screen is a group chat with all your friends who are within a mile of you. So really, that took off on college campuses. You could turn it on Friday night when you're going to be social and see where your friends are, where they're headed, and just and have this kind of ephemeral message with them about what's going on. So that was really cool. We launched at 10 colleges or so, and that went really viral too. But ultimately, we just ran out of time, and kind of the landing at Snapchat was was a decent option.
When it comes to like investing, so I know that like on your resume you have invested like throughout your like startup career basically. So I wonder, um so like since you have invested in like stuff like common stock and like some other companies, what were like some kind of like key lessons that you've learned in the angel investing era before you joined Wing?
Yeah, it's a really good question, Grace. I'm impressed. You've done your research. So yeah, so when I was working on Drop and Firefly, I had dropped out of business school. I had moved back to San Francisco. I had met my co-founders in San Francisco, so we were out here building it. We were in the city, and it was really fun as a founder because we'd go to these great events. We'd get connected to other founders. You're just in this great network. My roommate at the time was also a founder and starting a business. So the entrepreneurial energy in San Francisco in 2013 to 2016 was incredible. So I didn't have a lot of extra cash to angel invest, but angel invested in a few friends' companies, would put in very small amounts, but that was a really great experience just to have some connectivity. A lot of those founders have gone on to do repeat companies, or I've stayed very close with, or they've helped me in different ways. But invested in a handful of startups. I mean, so you asked about the lessons. I think some of the lessons are the market matters so much. I mean, when I was doing this, I just basically said, hey, so these are some of the smartest people I know. I'm just going to invest in them, and they'll figure it out. And I think that's true to an extent. Like, great founders can figure it out, but if you're in a hard market, it's very different than if you're in a market with a lot of pull, or where there's a really good why now. So especially investing in some of my business friends, like I would say they're all equally talented entrepreneurs, but some of them that pick great markets. I mean, their companies are made tremendous progress and carry big valuations, and some that picked harder markets or have raised 2 or 3 flat rounds and are just grinding in a different capacity. So the lesson is you got to pick a great market, and you got to pick where there's a lot of demand, there's growing demand. It can be easy to sell. You have a differentiated product, and so I think there's that constant debate in venture. Like, is it the team or is it the market? And I started. It's all the team. It's all the founder. And then I kind of went to no. It's actually all the market. And now I'm back to really, you need both to make it work in a very big way.
I wonder. So like I have some question about the market. I think like so I started my media company in 2020, in the middle of 2020. And then in 2021 it was like crypto NFT started taking off. In 2022 it was like at the highest point. And in 2023 it suddenly become generative AI. What exactly is a great market? So like I would assume it's like you started doing the NFT startup like 2 months before OpenSea explode or something. I wonder what would be a good market. What do you consider as a good market? And obviously, nowadays it's like AI, but AI value, like AI companies valuations like just absolutely crazy. Like, you could have a 2 people team and that's valued over like a 30 million or something. So, what exactly does a good market mean? And like when, I guess like timing is something that I personally feel like it's a really big factor as well.
Mhm.
At what time in what market is considered like a good market?
Yeah, Chris, really good question. I'd be curious to get your thoughts on it as well. So I think for a startup, right, a very small company that's trying to find its way in the world and make some progress and show up for customers. I think you mentioned the word change, and I think that really matters for a good market, for a venture company, for a venture-backed startup. So I think you're looking for a market that has change, and so one of those changes was certainly mobile and the proliferation of smartphones that had cameras. I mean, the reason why our app had a chance was solely because of the GPS capabilities built into the iPhone, and we could run in the background and be very battery efficient, and so we wouldn't have been able to exist. So we were betting on, okay, there's a new technology, and so hopefully there's a new consumer preference and behavior too, that hey, people want to walk around and find relevant content as they walk down the street. This is where my friend had dinner last night. This is a historical building I just walked by, or whatever it may be. And so that I think is really a defining quality of a great market, is that there's a change, there's a shift, whether it's a technology shift, a shift in business buying behavior, consumer behavior, and that shift is disruptive enough to allow a new startup to come to the market with a product that's different, and a product that meets these new changing needs. It's very hard for startups to compete head on with larger companies. It certainly can be done. I mean, I think something, I read the great analysis of all the unicorn companies, and I think it was about half going after existing markets, and half are going after new markets, or maybe even it's more going after existing markets. So it's not always that you need change, but I think change is really helpful, and really on the startups side. And then so also you need customers that feel the pain. I mean, I've seen this so many times now in the last 7 years of venture. You meet a great team, they have a great product, the idea sounds very logical, but then you talk to customers and you ask them how to rank this pain point. It's a question I always ask during diligence. Rank this pain point 1 through 10, or if you had to list the 10 biggest pains of your job, is this in the top 5? And oftentimes they'll say no. And if it's not one of the biggest issues that customer is facing, it's going to be really hard to make headway and get their attention, right? And if you talk to someone and they say, this is the biggest pain point, if you can just solve this, if you can help me with this, I would pay X dollars for it. And that's what you need to hear. People need to be jumping out of their seats. And so I think that's another thing that makes a really good market, is being able to listen to customers and have them, pontificate that this is one of the biggest challenges or pains of their day-to-day job.
I wonder. Okay, so let's talk
What
about.
do you think, Grace? I'm curious to hear, from a lot of the interviews you've been doing and work you've been doing as a founder. What do you think makes a great market?
I think a lot of people, like a lot of money chasing a market is a good market, but you have to do it like 2 months before that is happening, or at least 2 months before. So some people stick in one industry, and that can totally pan out if you have like a true passion in the particular industry. For example, let's call it blockchain or something. I definitely see crypto blockchain making a comeback. Some people would argue it's making a comeback, or it's already coming back.
Right.
But on the other hand, like I feel like, for example, AI, I feel like it's a really great wave, and then it's like obviously there's a significant technology improvement driving this trend. But on the other hand, if you're like, as an investor, if you're investing in the AI space now, you could feel like really crowded, everything is overly valued. For investor, I don't think it is a good market to like invest right now. I think it's a good market to invest in AI space in general, but you have to really hone it down to particular areas. That's like you mentioned, like solving a pain point, like focus on the customer, solving a problem. But instead of like the general AI trend and like making bets everywhere, like I feel like that's gonna be killed. So I technically don't think AI is like the best market to invest in, like right at this moment, unless you have a very specific domain knowledge. But speaking of domain knowledge, I love your newsletter, and I feel like there's a lot of really good like benchmark that you're putting on, and then there's a lot of like financial like analysis related things. I would love to learn more about like how do you create your newsletter. I'm not talking about like being a creator, how do you promote the newsletter. It's more of like what's your content dial look like to actually inform yourself about a particular industry. And obviously you have this like amazing tracker of like all these companies that have raised that you find interesting, and the product-led growth and AI financing space. Like, can you tell us more about like how do you kind of how does these company even got on your target? Do you stock pitch book, or are you one of the people have a tracker for people updating their resume on LinkedIn? What's your
Yeah.
approach on this?
Yeah, it's a really good question, Grace. Thank you for asking. So I do a weekly newsletter via Substack called Notorious. And so Notorious, we really write about the intersection of product-led growth and AI applications. And so AI applications, as you talked about, are really important. They're a new paradigm in terms of how they're ingesting data and what they can do with that data, what outcomes they can autonomously steer. But with product-led growth, I mean, we believe this at Wing. We believe this is the dominant market motion, go-to-market motion. If you can be a product-led growth company, you will dominate the competition. You end up building the best product, the easiest product to use, easiest product to adopt. You spend a lot of time obsessing over taking friction out. And so the newsletter is really about that. And it's got a couple different components to it. It has benchmarking of public companies, so you can get a sense of, okay, the biggest public companies, what revenue multiples they trade at, what gross margins they have, how fast are they growing. So if you're a mid or late stage private company or startup, it's helpful just to get a sense of how the public companies stack up to some of your metrics. We do a lot of private company benchmarking, so looking at some of the great metrics for the best PLG startups of website conversion and different activation rates and sign up rates and waitlist rates. And so there, hopefully that's really helpful. We're always adding new metrics to the newsletter on a monthly basis. And then really what I found is, to answer your question, Grace, is that founders love learning from other founders. So I think there'll be some newsletters that I'll write myself. Maybe I'm thinking about a different topic, or the same topic keeps coming up with founders I'm speaking with. I think it benefit a larger audience. But really, I love when I can recruit founders to write about their process or their go-to-market motion or some of their learnings, and those are the newsletters that really go viral. So we've built up about 10,000 subscribers, and some of these newsletters will get 20, 30,000 views, particularly ones written by other founders. So that is the best form of content. And so you're right. I mean, a lot of my job is tracking startups and keeping tabs with what's going on and following the news and following different trends we're excited about. And so reaching out to the founders in those areas and saying, hey, I know you're busy, but I'd love for you to guest author one of these blog posts. And we've had amazing companies write some of these newsletters. So it's been really helpful, and I think a great win-win for the founders to get some more eyeballs, and also for the readers to learn from some of the most successful startups.
If you're starting a company, or like if you're on the founding team, let's say you and I start like a product-led growth AI company, what sector should we start this thing in? And then like how should our product be? Like what kind of product benchmark do we have to hit to actually have the product-led growth? And then we can talk about the community approach later, because I hear about this on your other podcast with someone else about the community-led approach. But yeah, why don't we brainstorm as founders, like how should this kind of like a motion, like what should this motion look like? And then like what does our product benchmark have to kind of happen?
Yeah. Such a good question, Grace. I mean, I think the number one metric that you and I would obsess over is retention. And so can we get people to stick with the product? I think that is the most important thing. It's the number one metric I look for when I'm evaluating a product-led growth company. And so, yeah, if we raise $10 million, we can take that $10 million and go buy a bunch of customers. And so I think, activation and onboarding, really can be just a function of how good you are marketing, how good you are spreading the word. But if those users leave the product in 2 days or 2 weeks or 2 months, we have a leaky bucket, and it's really hard to raise venture money to keep filling up a leaky bucket. So I think we would obsess over retention and just do a lot of user interviews. How can we get you to stick around the product? And so, I mean, what areas could you build a PLG business in? What areas are amenable to PLG? I think if you're going after an area that has a lot of different stakeholders, like if you're selling into HR, for example, usually you have to sell into the hiring manager, you have to sell into the HR leader, you have to sell into the talent leader. There's a lot of people that need to sign off on the product, and that creates a lot of friction. It's complicated because you have to appeal to these different user personas and speak each of their languages. And so I think usually the best markets for PLG is when the end user is the same as the business user or the buyer. So if I'm using the product and I can put it on my credit card, or I can get my team to use it, those are the best markets for PLG. So productivity tools, communication tools, a lot in the go-to-market world for sales and marketing teams. Certainly, there's amazing PLG businesses being built for developers, for R&D and engineering product teams as well. So there's a lot going on, and then there's vertical SaaS too. Like if you can sell into, I have some companies that are selling into small businesses, and using PLG to do so, and redefining the playbook there. So I want us to focus on retention, and I want us to think long and hard about, is this a market or a category or a functional area that is amenable to PLG? And there's a checklist of things we can ask around that.
Okay, so let's talk about so I wonder, in terms of I feel like there's like a couple big trends that's happening. For example, like because of AI, their products are built like a lot cheaper than before, a lot faster.
Right.
So people may not need money after call it like a Series A or something. So like I think there's a lot of funds that are bad on the companies are just gonna go IPO after raising Series A, not like immediately, but like they're
Back to the 90s.
efficient. But yeah.
Yeah.
So and then which means all the SaaS brand, or like all the um basically all the companies are really have to build their own brand early on to kind of survive in their own market. But obviously I feel like the product led growth has like a lot of maybe differentiation, because of like your product have to kind of speak for itself instead of just building brand. I wonder, what's your thought process on um, beyond first of all, how do you even create a product that will attract retention? Um, besides doing a lot of customer research, what exactly should be the motion to actually get to the point that this product is like a really sticky product? And number two is in terms of you talk about community led growth, you gave the example of Notion and this other companies that are doing well on the basically um the community building space. What's your thought on after having a great product, how to kind of maintain people within your domain? Because a lot of the product could be very similar to each other when you are, becoming a lot bigger, more obvious success, like people start copying you.
Yeah, I think you're asking an incredible question, which is how do you shape a product to retain users? And I think that there's a lot written on this. There's great literature, there's great case studies and blogs about this. And so I think it really comes, and I've written about this too. I think it comes down to actually putting a lot of time up front to understand the customer. And so there are a lot of founders I meet who are very talented and very excited and eager to quickly build something. And I said, well, how many customers do you talk to, or prospective customers do you talk to? And they'll say, 2 or 3. And then there's other founders I meet who have talked to 50 customers, and they have, notes of hundreds of pages of notes. And those founders who maybe slow down, who catch their breath, who spend time talking to all these customers, it's almost this earned insight they have. Like this is, I'm reading between the lines. This is really what they're telling me X, but they're really saying Y. And this is what I'm going to build something that solves for Y. And I think that is really special. And I don't see that all the time. I see that very infrequently with founders I meet. And when they have that, that's when I really am leaned in and potentially want to partner with them pretty quickly, because that upfront work and legwork really means a lot. And so there's one camp which is, hey, just build it and just start tweaking it and testing it. But I think you can point in the wrong direction, and if you're pointed in a 45-degree direction that's off, yeah, sure, tweaking it 1% here or there gets you closer. But I'd almost rather see you do the work up front and then point in 5 degrees off, and then you're tweaking it to get back to where you're supposed to be. So I really think founders that put in the legwork and do a lot of research up front are the companies, the founders that build great companies. So I wrote a blog post saying, the best businesses are built in the first year. And actually, Lenny put out some great data in some of his newsletters about this too, that companies, a lot of Notion, for example, or Airtable. I mean, a lot of these great companies took Figma. I mean, took like 1 to 5 years in certain cases before they even started monetizing. Like they were just figuring out the product and the right user persona and just kind of doing the hard work. And I think that is something that that patience is really important. And then community-led growth. I mean, that's a really hot topic as well. I think Notion and Miro are two companies that pioneered this in a lot of ways. Figma pioneered this in a lot of ways too, where these companies are showcasing the work of their users. So there's probably a community page or a templates page in the website. You can go in and see, okay, look at this amazing template for Airtable, Grace built. Look at this amazing template for that Zach built for Notion. And so you can get inspiration from other users. So there's a flywheel. As you have more users, they share their work more, which makes it easier for new users to get onboarded and get going. So that's a really powerful trend. Not every company can unlock community growth, but it can be a very efficient way to scale and go viral.
I wonder, so like, what does community-led growth mean? So okay, let me just repeat what you just said. So one of the things that founders should do, just to talk to, let's call it 50 customer, and then really do the legwork to tweak your product based on these feedback immediately. And then you mentioned 1 year rule, which is I guess within 1 year, the make or break of this company is kind of it's easier to tell. And I wonder, what kind of benchmark should the person hit after 1 year? What kind of retention is a good benchmark that to use? And you have a lot of really great data on your newsletter, but I would say, is there a checklist of things that you have to see after 1 year? And then when you investing, sometimes I assume some of the company probably didn't really hit 1 year or something. How, as an investor, what would be, let's call it Zach's checklist of okay, here's 55 things these people kind of fit into the bar. So I decided to invest.
Yeah, that's a great question. So there's a couple things to look for. I mean, I think one. So let's talk about the top of the funnel, which is people coming to the website and then actually converting to becoming a user. You'd be surprised how low that number is. So like a good startup, a good PLG startup, if you have 100 people coming to your website, 5 of them actually use the product, right? So that's the conversion rate from website to free user. Where a great PLG company has 10%. So 10 users out of 100, 10 visitors. Out of 100 visitors to the website, 10 would become free users. And so you're looking for, okay, what does that tell you? That tells you does the product marketing, the product positioning, the product value you're advertising on your homepage appeal to enough people that they're willing to try the free product? So that's one thing we look for, right? We want to see that you've been able to tell your story. And then what you want to see is do those free users become activated users? And startups can define activation in different ways. Usually it means they'll use the product for 3 days in a row. That's what a startup will define as, okay, now they're activated. Or they maybe take a certain step, a certain action in the app, and then they're activated. And that really means that they've made some level of commitment to the app. It's more than just downloading it and signing up. It's actually taking a few necessary actions. And so the best PLG startups, 50% of the free users will be activated. So that means if 100 users came to their website, 10 downloaded the free product, 5 of those or half of those became activated users that are kind of committing to using the app. A good PLG company is 30% instead of 50%, so 3 instead of 5. And then you're looking for how many of those users stick around in 3 months. And so great PLG companies is around 30% of those users are still using the product 3 months later. And for good PLG businesses, it's 15%, so half that. And so certainly there's nuances, like what type of PLG business is it? Is it consumer or is it more consumery? Is it more traditional enterprise? Is it somewhere in the middle? So is it vertical SaaS? I mean, there's different categories that
Oh,
you
I
know,
I have
stuff
a question. I have a
yeah.
question there. I'm so sorry to break it up for you. But okay, so let's say if a company come into you and then give you all these data, how do you vet if it's true? Like obviously I think
Great question.
everyone would only say amazing things about themselves, but
That's a really good question, Grace. I think, yeah, particularly after FTX and some other high profile, uh, you know, blow ups, if you will. I mean, I think every VC is spending more time doing diligence and checking numbers, and so we're asking for as much source data as we can. Like we're asking, hey, show me your amplitude analytics page, or can you download a report from Mixpanel or something like that, just to get as close to the truth as possible. I love when founders are really open and vulnerable about their data. As a founder, it's really hard and scary. But like, some founders will even let me log into, to the analytics platform. And so like, if someone allows you to do that, you just have immense trust. And of course, like no numbers are going to be perfect when you're early. I mean, especially the seed and Series A. I mean, the numbers matter a lot, especially the retention numbers, see if there's user love. But like, it's still a lot about the market. It's still a lot about the founder. The founder's still tweaking the business, tweaking the product, tweaking the go-to-market. So you gotta put everything together. I mean, I think as you get later stage in venture, it's more about just the numbers and the spreadsheets. Early stage, it's still just as much an art as it is a science, even more an art than a science. And so but you're right. We're always looking at trying to get to the real numbers, especially as we get serious. I'm glad you asked that question.
I wonder. So okay, so first of all, I feel like all these data you should publish it in like a format because I feel like the newsletter is great, but I feel like the benchmarks should be in like a PDF on its own. So I
Great
feel like
idea.
people would totally love to like I would totally love to like benchmark these all when I see something and then like if something makes sense, I will send it to you or something. I feel like that itself should be like a standalone product. But I wonder, okay, so how do you acquire these data? Like how
Mhm.
many like founders do you have to chat with for people to share these like really vulnerable data? Because I would assume, like, I don't know how to, like, make people be like, "Okay, so here's, like, 45 things about our business that I can share with you." And obviously, if, you come from, like, a founder and angel investor, back in that era, how do you kind of acquire the startup data even you want to invest in them? But, like, let's call it, like, your check size is a lot smaller than you are at a venture-backed, like not venture-backed, like, actual institutional backed VC firm, right? So I wonder how do you kind of like acquire certain data or just take it at face value when the founder kind of mentioned it over like a dinner or something?
Yeah, it's a really good question. So we're always trying to be uh, thoughtful about the data as possible. We never share a company's data. Everything that I do is completely anonymized, and we show the medians. And so yeah, we'll study our portfolio. We'll study companies we meet. I've been really focused on intersection of PLG and AI for 4 or 5 years now, and so I've just met thousands of companies, and so I've built what I think are the right benchmarks, and I'm always massaging those. I mean, sometimes I'll meet companies that, wow, like they've really I thought this was top decile, like they're top decile, right? And they set a new bar, or over time, you see things drifting down, so we update the averages there. I love your suggestion, Grace, of making some website or PDF, something where people can put in their data and see how it compares. I think that's a really good suggestion for PLG apps and startups. But yeah, and also there's other benchmarking reports that come out, so I'm always checking mine against those, and some areas I'm higher, some areas I'm lower. But yeah, you're just it's a big triangulation effort, and it's a lot of fun too. Because I think it's founders always want to know how do they stack up, and how do the same question you asked, like what retention do I need to raise a Series A? Right?
Um, for the data, I want to quickly say hi to the audience. Hi, Igor. We're gonna address your question at the end. Okay, so I wonder when it comes to like these like giant forms about like the enterprise value or like the 4 weeks of price stocked percentage changes and everything. So I guess like what does your weekly tracker look like? Is this like a tool that you have built for yourself, or like do you have to manually go through the data, or like maybe your assistant or something go through the data? Like how does it work to even like compile these like really important information, and how does it tie to like the startups area, because they are obviously public companies, and like is there actually like a really tight like correlation between like the public market versus like a PLG startup?
Yeah, really, really good question. Yeah, so the benchmark we do in the newsletter around the public companies, I think there's a couple metrics that translate. So one of them is gross margins, and if you can see what the best PLG AI software businesses are that are public, like what are their gross margins? That's really helpful. Gross margins are something we look at. We want to invest in companies with software like gross margins, so really over 80%. And there's other metrics that translate to like the CAC payback period, like how long does it take to for if you're spending a certain amount of dollars in sales and marketing, how long does it take that to pay that back with new customer acquisition? So that translates to startups, especially in the later stage of startups. There's some that don't translate as well, like revenue ARR multiples, like company value to the ARR. Those multiples for public companies, those will be different than private companies that are growing much faster. So sometimes you look at those growth adjusted. So like if a startup, it could be growing 300%, where a public company is growing 10% a year, right? So it's not the same level of growth. But it is helpful for startups. Just hey, what is the gross margin of Shopify, right? And like you could comb through through Google Finance to try to find out. It may take you a couple minutes, or you could just look at our grid and see what it is, and see what the medians are and the averages are, and top decile is, and everything like that. And again, like I think the best companies don't define themselves by benchmarks and the averages of other companies. I think it's helpful to check now and again, but the best companies are reinventing business models, reimagining, kind of how they charge customers and how they deliver value. And so, I think a lot of these AI apps, you touched upon it, right? Like it doesn't cost as much to build a business, and that cost will keep going down and down. But you can deliver a lot of value to customers. So we may see much higher gross margins, or we may see it be way easier to acquire customers because you can do something really different. So I think we'll see some new archetypes of business models over the next decade, and those will look very different than the public companies that are in this benchmark sheet today.
Totally. Okay, so let's talk about like the companies in your newsletter. So I
Yep.
mean, I feel so bad for like focusing on your newsletter, but I
Oh,
feel
it's
like
great. It's great.
a lot of the part of the investing is coming from your like output of your input, kind of like
Yes.
like, so when I'm looking at, like, for example, you have like seed, series A to D, kind of like, there's a couple companies that you're like on your radar.
Mhm.
How does a company get on your radar? Is it like a specific kind of like, um, you know, do you track everything on TechCrunch, or is it more of like, okay, so here's like a 5 fund that I like like religiously track? Or I mean, obviously there's a lot more than 3 funds of these companies, but I guess like how do they even get on your radar? And how do you process these information as they're happening in the ecosystem?
Yeah. Well, it's an amazing question, Grace. And so I think at Wing, we're an early stage venture firm. We invest a lot in our data. And so we're actually, right after this, we have a sourcing meeting. We do a couple sourcing meetings every week. And so those are all data driven. We have different data sources where whether it's from, as you said, Crunchbase or PitchBook, or other proprietary data sources, or LinkedIn or X, or and then we're ingesting those. We've actually built a machine learning model we've trained it over the years of like, here's a company we're excited about, here's a company we're not excited about. So it learns what we're looking for. And so we have built a pretty robust model, and we go through those every week and keep training the model, and do a lot of cold outreach, and get warm outreach, warm intros from that process. So a lot of the companies I feature of recent financings in the Notorious newsletter, some come from that, some come from other sources, but really we're just trying to show founders, hey, what's getting financed, what's getting financed in really high quality VCs, what's exciting today. What are the, oftentimes I put in the round size and valuation if it's public, and so where are these companies raising money at? And so I think those are all helpful data points for founders. And really the newsletter is serving founders and early stage builders and practitioners at startups and high growth companies. So that's the audience we're going for. But yeah, sourcing is it's the lifeblood of venture. We're always trying to meet new great founders, and I think we're getting pretty sophisticated at doing so with some of the investments we're making internally.
How do you train the model? Like, I'm not talking about like to give you to just give out every secret or something.
Yeah.
I guess like what would be like the general vibe of like the benchmark? Would it be like, okay, so we're tracking repeat founder, we're tracking like the founder coming out of, a certain firms or like or certain companies, or what would be like I also know that you guys published like the new angel investor, and
Yeah.
enterprise angels, and like I mean, I took a look. Like some of them are like past guests, and then so
Oh,
basically they're
amazing.
all like just AI founders in general, right? So basically, I wonder like where does the most quality deal even come from, or if there's like a particular pattern. Like obviously, like I mean, we're not talking about like okay, gave like major detail or something. It's more of like okay, if there's like a pattern of like let's say the top angel are from like a person who sold a company over, or like who raised over like a 100 million like value over $1 billion or something. What would be the major benchmark of like the majority of like quality deals that are coming from, and why?
Really good question. And so this is something we spend a lot of time thinking about and trying to understand where are the next great founders coming from, right? And I think that's what you're asking. And so, we invest, we just focus on B2B at Wing, and we invest up and down the stack. So that means applications all the way down to infrastructure, security, and certainly the dev tools and everything in between. In infrastructure founders are typically come from companies where they were working on infrastructure before, right? It's pretty hard to start an infrastructure company. It's a pretty bespoke knowledge, like the Snowflake founders, right? I mean, they came from the belly of the beast at Oracle, like building this stuff before. If it's more down stack, you can get a little bit more predictive of where people are going to come from. And so we do a lot trying to meet founders before they're founders. We try to network with people coming out of infrastructure teams at Airbnb and LinkedIn and Stripe. These will be the next founders building great infrastructure projects. At the application layer, founders come from everywhere. Some founders come from consumer apps. The Superhuman founder was at consumer apps before, right? Founders come from B2B businesses. Founders come from undergrads as in college. So it's very hard to predict where the next great application founders can come from. They're different ages. That is something, why we invest so much in data and trying to track these things and keep tabs on them, right? Like, did someone make an interesting post on X about a new startup? Are there headcount trends in this really interesting area right now? So trying to do more around that. And the other reason why we spend so much on invest so much time and energy in content, like this newsletter, a lot of the events we do, the Enterprise Tech 30, the Angels List, all of these brand building activities, is because we want founders to also recognize us and come to us, right? Like, I don't think any other VC has written as much about product-led growth as I have. And there's a lot of founders that will reach out to chat about that, and they're building a PLG company and want to brainstorm on something. And so like raising our hand and holding up the Wing flag, it's really valuable to founders building apps because they come from everywhere. So it's a great question, and I think it's certainly dependent on the type of business these founders are building.
I wonder, so like I want to ask a question about the team. Obviously, I want to give a huge shout out on like the Wing team, because I feel like the events you guys throw were great. And then obviously I've chatted with like a couple other partners from your firm on the podcast. And like I feel like something I think you guys did really well is like I feel like the brand is like really clear. We're B2B
Mhm.
investors investing in AI, that kind of thing. So I wonder, and then also like basically I feel like all of your newsletters are just like amazing, and then each person have their own like spin on a particular domain. And
Mhm.
that's like even in the B2B space, it's like really hard to see as like most investors just post about literally everything in B2B. I feel like uh, so I wonder like how does a team kind of function together as like each person have their own subdomain within their market? Like how do you guys define like, or like I guess how does a brainstorm look like within the firm? It's not like each person share like a particular like 5 things that they've been focusing on this week or like trends analysis or something to the whole team so people are all like informed, or how does it work to function as a venture team?
Amazing question. I've really impressed with where you're taking the conversation. So this is a wonderful topic. We could spend a lot of time on it. I think because we have focus, right? We just do B2B. We just do early stage. We're pretty concentrated in geographies for the most part as well. So that focus really allows us to have overlapping networks, right? So I'm focused a lot on the application layer. I invest in some infrastructure projects as well. Some of my partners who maybe are more downstack and do some more security and infrastructure, they will meet a company that is looking for infrastructure company looking for customers or customers to diligence with. They were application companies, and so I'll join that meeting and weigh in on the opportunity and introduce them to some of the companies I work with. And so there's just a lot of connectivity across our team. We work very closely together. We also do 2 offsites a year where we get together. We really kind of turn off our email and stay very present, and we give updates, what we call prepared minds on different topics. And so these could be maybe a topic that you're spending 80% of your time in, maybe a topic you're spending or a subject that you're spending 20% of your time in. And again, these are all overlapping and reinforcing, given what we're doing. So a lot of the AI app companies, like they're using this next gen infrastructure. So I hear about a company and send it over to my partners or go and track that company and invest in that company. So, one of the companies I led the seed co-led the seed of is called Voyage AI, which is an incredible team out of Stanford building embeddings models, which are a really important part of the AI stack. There's a lot I can leverage from the experience I have investing in applications to help this company. They're certainly a PLG business and growing very quickly. So, it's really takes a lot of work and it takes some focus to really make sure we have these overlapping networks and reinforce each other.
I wonder, so thinking about like, for example, let's say Voyage AI or other companies coming out of the Stanford, like either professor or um founder out of the space. Like I feel like a lot of it are, so a lot of the AI companies, I feel like they have like fantastic technology. I'm not saying this company in particular. I'm just talking about like, school oriented projects that coming out of like a university in general. Like
Mhm.
there's a lot of companies that are um very interesting from the technology perspective. Like, how do you figure out like which one has a better, go to market or motion? Or like does a team have to be equipped by, like people coming from the industry and then the other person is like a professor at somewhere or like,
Mhm.
or like a tier one researcher somewhere. And then for the researchers, like when you're diligencing a researcher in a particular space, how do you figure out like if besides like, they have published papers, obviously, like how do you figure out like if they are like the top person from the um domain, or does that even matter for starting a successful company in general?
Yeah, so you're asking a great question in terms of, I think what you're asking really is what what is the most important thing for some of these startups? Is it to have the very best technology? And so if so, we need to diligence like is this builder, this professor, this researcher, whoever's launching the company,
Mhm.
top 3 in the world at what they do. And so we're going to talk to other researchers. We're going to talk to other practitioners. Have you heard of this person? Have you read their papers? Do you trust their research? Do you rely on their research? Right? We can talk to students in their labs. So there's a lot of work we can do, and that's what we did around Voyage. And so in Voyage was a case where the technology matters like that. It's like if you can build the best technology that's going to give you the highest quality accuracy, going to be the best cost and the most scalable, and also like can really be built for your domain, like that is what's going to win here. So you have to ask the question, what's it going to take to win? What are the elements that you're going to win on? And then you have to diligence each one and make sure you're asking the right questions. It's funny, when I was early in my career, actually at TPG, we used to do this thing called the WRM, which is the what really matters. And every investment you look at, you could come up with a list of 3 things. There's a million things we could diligence, right? There's a million questions we could ask. What are the 3 things that are really going to matter? And they're different in every company. Sometimes it's, the product positioning. Sometimes it's the technical merit of the company. Sometimes it's like, are they amazing at building hype and building buzz and building a brand, right? And so I think the best investors can really ask the question, what are the 3 things that really matter? And then they're really good at evaluating those 3 things. And I think that is part of my investment style and philosophy, and trying to ask the right questions and focus on what really matters.
I want to close on like a one real question because I know we have a hard stop, so I'm gonna skip the fire on it. So, I know like you talk about like the what really matters, right? Like as an investor, obviously making return is something that matters a lot. But like
That matters a lot.
what as it goes into like making great return? Like I guess like how do you define like the core capabilities of an investor that is what really matters?
Yeah. Independent thinking, curiosity. So obviously, what goes into a great deal? It's or a great return. It's a great company, so a company that grows a lot and becomes substantial. But it's also getting in at the right price. I can go and invest in a really great company at the latest stages, but I don't know if that's going to be the best deal, right? In certain cases, it will be. Certain cases, it may not. But so you need to find something that, like, I think one of our slogans is invest before it's obvious. And so we do a lot of work, we do a lot of research, thinking about new areas, and working with founders that are thinking about those areas maybe before the rest of the world has realized that's an important area. And so if that's the case, you can invest really early. You can invest at a valuation that's fair, and that maybe hasn't been fully baked in from the excitement of the market yet. So it takes both entry point and picking the right company. And those things are very hard and very rare. I mean, this is I wouldn't say that's easy to do by any means. It takes a little luck, of course, too.
Okay, so I know we're out of time. Thank you so much, Zach, for coming on the show today. And yeah, do you want to end with a 1 minute fire round? I end with
Yeah,
everyone.
let's do it.
Okay.
I can be.
What's your favorite book? What's your favorite book? Favorite book? The first question.
Oh, favorite book. I think one of the Right Stuff by Tom Wolfe, which is an amazing book I read a decade ago and still think about.
Who would you invite to your dinner party?
Oh, really good question. I would invite some professional athletes that are at the top of their game. I just think like the mental stress they have to go through, the focus they have to build, and like the relentlessness and determination and just the grind is so exciting and so impressive and so motivating. I just want to understand that mindset. Like the champion's mindset is really special.
Who would you invite to your who made the biggest impact in your career?
It's a great question. I would say my partners at Wing, particularly Peter and Garth, 2 founders, have just been really encouraging, supportive. They've given me so much time, and I've learned so much from them. I mean, they're incredible investors. They had great careers at Sequoia and Excel before Wing, and just learned a tremendous amount, from working closely with them.
Like I would ask, what did you learn from them? Like, what would be like the one core lessons in like 3 sentences?
I think it's getting better at what really matters. And getting better at asking the right questions. And certain things matter for certain investments. And so they've been doing this for a while, and they've seen they've seen what excellence looks like, and they know what to focus on with every company. It's just amazing to watch. They get to the core issue faster than anyone I've ever seen.
Where can we find you outside of work?
I am in San Francisco. I live here with my wife and 2-month-old daughter. And so always running around the city and down in Palo Alto for work half the week and up in the city meeting founders the other half. So anywhere in between, and always down to go for a walk and get coffee. And it was great to meet you in person at our Wing AI event, Grace. And I got to say, I'm so impressed with what you're building, and a big fan of your work. And I've watched a bunch of your these live streams at 9 a.m. It's awesome.
Thank you so much, Zach. I so appreciate you. And I will let you go. I know that your other meeting may kill me. But anyway, thank you so much.
Well, let's do this again. I've really enjoyed this. You asked very insightful questions. You made me think about things in a different way. And I always love conversations where that's the outcome. So thank you, Grace. And really grateful to be on this with you.
Thank you so much. You too. Thank you, Zach.
Okay. Bye. Have a wonderful day.